back to the markets then. It wasn't as clean a run really for the markets in the week gone by, given that we actually, trudged lower by about almost 1%, dragged once again lower by IT. What held out was once again FMCG and pharma, but unfortunately they didn't have that kind of might to actually pull the markets forward. The key question is, will the Nifty now see a breakout, given that you've got two heavyweights, Reliance as well as ICICI Bank, which have come out with their numbers, and will they really manage to do that trick for the markets or not, Nikunj?
There's Reliance, there is ICICI Bank, and there is a push coming from HDFC Bank. You put all these three together, it's actually 20% plus more weightage on the Nifty. So 20% plus weightage on the Nifty is on the right side of the trade. Now that's a big weightage. Infosys is unlikely to fall more. IT, the collateral damage has already been done. So that makes it about 35%. So 35% weightage now would be working in favor of the bulls. Markets always look for a trigger. Is this combination of Reliance, ICICI Bank and that news flow push from HDFC Bank, is this combination good enough to take Nifty out of this range which we've struggled in the last couple of days? The breakout moment of 17,800, 17,850, will that happen because of the push? I hope so. That's what SGX is indicating, and that is what I guess the market setup is, that the news flow, because of heavyweights, may just align things in the right direction, and we could be in for a good start to the week, considering that the result momentum has now picked up.
Yeah, and speaking of result momentum, just let's recap then what heavyweight Reliance Industries doled out on Friday's session. That's, of course, post-market hours when I say Friday's session. And you had the revenues, which came in at about 2.12 lakh crore rupees. It was the highest consolidated profit growth that the company delivered, up 22% in the last 5 quarters at 19,299 crore rupees. And the company's consolidated EBITDA was higher, and that was largely driven by the by the O2C segment as well. You had Reliance Industries, then ICICI Bank, as Nikunj flagged off, and just looking at these two heavyweights closely, Nikunj, the brokerage notes that have filtered in over the weekend, all giving a big thumbs up to the strong show delivered by both of these heavyweights, a buy or an overweight rating for majority.
So, Reliance numbers are not the ones which will re-rate the stock, but after months of disappointing and underperformance, these numbers will ensure that there could be no further collateral damage to the stock purely based on numbers. So the good bit is that the O2C business has stabilized. Jio and retail is growing, but the trends for this quarter are weak. So you are not in for a huge upgrade from Reliance, but the fact that things, at least in the O2C business, are stabilizing, which means in the near term, the cash flow and a lot of other slowdown concerns which were there, at least in the O2C business, that's been taken care of. ICICI Bank, on the other hand, I think it has ticked all the boxes. Net interest income, margin expansion, commentary in terms of where the credit offtake is likely to move, and how subsidiaries are filing full cylinders. So ICICI Bank has been an overweight stock. It's a buy. And I think post these numbers, a 15 to 25 rupee move in ICICI Bank cannot be ruled out. Frankly, large part of the attention of late has moved to HDFC Bank, but I think ICICI Bank now will come back and occupy the center stage. The gap should narrow down further, even though ICICI Bank has been a great performing stock. Let's look at the earnings upgrade. And the EPS upgrades for ICICI Bank may just warrant 2 to 3% upside, at least in the short term, immediately.
We are looking at the brokerage upgrades coming in, not just for ICICI Bank, but first Reliance. JP Morgan maintains its overweight with a target price of 29.60. Motilal Oswal a buy with a target price of 2800. And the most bullish price target for Reliance Industries on the street is coming in from Jefferies, which has put a 3100 rupee per share price target on a 12-month basis on RIL. Then, of course, ICICI Bank, wherein both the PAT as well as the NII has managed to meet the estimates. The asset quality has seen an improvement. And ICICI Bank, it's pretty much a consensus coming in there as well. CLSA a buy, 1200 is the price target put on that one. So a 4-digit price target coming in from pretty much across the board. JP Morgan overweight, price target 1150. Jefferies buy, price target 1180. But you know what? That's not it. You've got a massive, or rather a big week in terms of earnings. This one as well. Everything from an IndusInd Bank to a Bajaj Auto, Nestle, Tata Consumer, HDFC Life, Maruti, Bajaj Finance with its weightage of 2.3% on the index, SBI Life, Wipro, Axis, Bajaj Finserv, Tech Mahindra, Unilever, as well as Ultratech Cement. So a total of almost 18% of the Nifty weightage declares its numbers this week, Nikunj.
Yeah, so 18% weightage due, 18% weightage will react to numbers today. So which in a sense makes this week in a sense a very important week purely from the perspective of numbers. I think HUL is the big one because HUL has been in performing stocks. So market curiosity will certainly be centered around HUL because that's one company where you really want to hear the gradient demand, impact of monsoon, and there is going to be a change of the guards. That in a sense is important. Bajaj Auto, a bit here and there. The stock technically has done rather well, but in terms of in market opinion, I don't think very large expectations are there. Maruti, yes, couple of tough quarters. Couple of quarters in terms of where they've lost market share. Now the SUV market is coming back, and I think they, in a sense, would really be important from a market standpoint. Then there are a whole host of mid-cap numbers which we'll talk about as this show progresses. Tech Mahindra again, from an vantage standpoint, not because of the environment, but because of a change of guard, and Mohit Joshi from Infosys moves there. So that, in a sense, is going to be key, key number. So it's a busy week and it's an important week because if you come on the right side of this week, then you pretty much know that directionally markets should head higher. And if you look at the market setup, frankly, it's not bad. We've added a 7 to 800 point rally on the Nifty from the recent lows. You've seen a comeback and stabilization in FI flows. Globally also, it's not looking that bad. And FI selling and commodity prices are behaving themselves. So the setup, I think, is such that you want to be more bullish than bearish. The setup is such that you do not want to cut your longs and you do not want to go short. So stay invested, stay on the course. I think this market has given us 1 week of nice and steady consolidation. This week, let's hope if you're a trader, you should play for the breakout.
Okay, and just going by what the global screen as well has thrown up for us this morning, we are leaning on a bit of support, although it was a mild close then for the US markets, and Asia is a bit mixed. That's the SGX Nifty around 17,696. But yes, we're talking about heavyweights and they're really dominating the headlines this morning. HDFC Bank and HDFC as well will be in the spotlight as the Reserve Bank has allowed both of them to smooth out the merger, and that is set to conclude by the month of July this year. So they've said that they've permitted the bank to meet the priority sector lending requirements, and that's going to be in a staggered fashion over the next 3 years. However, post the merger, HDFC Bank will have to comply with the requirements to hold a certain level of cash reserve ratio, SLR, and liquidity coverage ratio in the entire merged balance sheet, Nikunj, and this is going to be right from the beginning.
Yeah, so there are two things here. One number, it clearly means that the decks are now cleared for the HDFC Limited and HDFC Bank merger. And what the management has been saying, somewhere between 15th of June and 15th of July, it will go through. B, there is going to be a huge impact in terms of what the new ruling is, which is that to put it very simple, the Reserve Bank of India, or RBI in this case, has given some more time to HDFC Bank and to HDFC Limited to really comply to the entire regulatory norms. They get a window, and because of that window, there would be substantial amount of positive impact on the balance sheet of both HDFC Bank and HDFC Limited when it comes to the capital requirement. And because of this, in the near term, the earnings for next 2 years for HDFC Bank and HDFC Limited automatically should go up by about 1.5% to 2% depending on the estimate. I don't think markets in a sense were hoping this. This has come as a surprise, and this has come as a positive surprise. Since this has come as a positive surprise, markets would appreciate that. So HDFC Bank actually may just surprise everybody today with the positive start. I think then it could be ICICI Bank and then Reliance. Now Reliance, the numbers are not that strong that they'll warrant an uptick, but at least there is not going to be any downside. ICICI Bank will warrant an uptick, and HDFC Bank this month, though it's been an outperforming stock, I think will get recognized more.